Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. Students, in the previous class we have solved a problem on that is white limited, right? White limited. Now let us move on to the next problem, problem number 13, problem number 12. It is the last problem, isn't it? Page number 108. 108. I will read out the problem, we'll analyze, and in the meantime we'll solve the problem. You are required to prepare a balance sheet from the following information as per the provisions of the Companies Act 2013, Schedule 6. Equity share capital, you know it very well, isn't it? Share capital. Preliminary expenses are dealt in the previous problem, that is current assets, isn't it? Other non-current assets. It is not current asset, it is other non-current assets. Other non-current assets. I told you preliminary expenses will be written off over a period of time. It will not be written off in the year in which it was incurred. So when we defer it for many years, then it should be treated as other non-current assets. Remember. In the previous problem, I don't know how did we treat, but if it is placed in current assets, change it to non-current assets, other non-current assets, under non-current assets, other non-current assets. Clear? Yes. Discount on issue of shares. Discount given to raise money by issuing shares is nothing but finance cost. Finance cost. Whether it is required here, finance cost, where it comes in the statement of profit and loss, right? Statement of profit and loss. But though it is finance cost, as it is discount on issue of shares, we are spending it to acquire what? Money, isn't it? Long-term money, capital. Correct. So the expenses incurred there too should be placed under finance cost, and here in this it will not come in the balance sheet. Remember. Yes. Then goodwill should be treated as intangible asset, correct? It is an intangible asset, so comes under fixed asset. Then 10% debentures. 10% debentures, no doubt, non-current liabilities, fixed liabilities. Stock in trade, inventories, isn't it? Inventories. Then loose tools, current asset. Loose tools comes under current asset. Bills receivable, it is under current asset again, bills receivable, isn't it? Cash at a bank, cash and cash equivalents, motor vehicles, fixed asset. Provision for taxation. Taxation provision is a short-term provision which is restricted to 1 year, isn't it? Less than 1 year. So we will treat it under, that is, we will show it under, that is a provision for taxation under, that is a short-term provisions. That's all. Let us solve the problem. Write the name of the company. Company's name is not given, dash limited, isn't it? Dash company limited. We'll solve it. balance sheet. Balance sheet for the year ending March 31st, March 31st, 2018. Correct? Yes. Yes. Now draw the columns. Note number. Yes. Now write the column headings, particulars, note number, figures at the end of current reporting period and figures at the end of previous reporting period in rupees. In rupees. Yes. Let us start. Equity and liabilities. First one, Roman 1, equity and liabilities. And liabilities. Under that, first one, shareholders funds. Shareholders funds. Shareholders funds, isn't it? Equity share capital is there, whether preference is there? No, preference share capital is not there, so no need of preparing note. Right straight away, 9,56,000, isn't it? 9,56,000. Shareholders funds. Then reserves and surplus. Are there any reserves here? No, there are no reserves in the balance sheet in the details. So no reserves and surplus. Straight away move on to the next part. Share application, money pending, allotment is not there. Non-current liabilities, third one. There's the second one here, non-current liabilities. Non-current liabilities. What are the non-current liabilities here? Non-current liabilities. Debentures, right? 10% debentures. Are there any other non-current liabilities? No, only one item is there. So, note number 1, notes to account, notes to accounts. Draw the columns, particulars, 2 amount columns, amount in rupees, right? Yes. So, first one, non-current liabilities. Non-current liabilities, under that debentures, right? 10% debentures, 10% debentures. Yes, how much it is? Enter in outer column, 10% debentures, amount is 2 lakh, right? Yes, 2 lakh. Right here, note number 1, 2 lakh. That's all. Then comes anything else? Long-term provisions are there? No. Provision of taxation is short-term provisions. So that's all. Nothing else. Let us move on to the third one, that is current liabilities. Current liabilities. Current liabilities. Are there any current liabilities? Debentures, stock, loose tools, bills receivable, cash at bank. No, there are no current liabilities. Current liabilities. Yes, one current liability is there, short-term provision, isn't it? Short-term provision, that is provision for taxation. Short-term provision. Under that, a short-term provision. Let us prepare note for that. Short-term provisions. Provisions. How much is the amount? Short-term provision under that. Which is a short-term provision here? Provision for taxation, right? 16,000. Under that, provision for taxation, right here. For taxation, 16,000. That's all. Yes. Second one, that is note number 2, 16,000. That's all. Then are there any other things? That's all. So total of liability side is 11,72,000. This is the answer. Let us move on to the asset side. Second one, Roman 2, assets. Assets. Under that, first one is non-current assets, that is fixed assets. Non-current assets. Under that, point A, fixed assets, isn't it? Under that, motor vehicles are there, fixed assets, tangible. Then there is goodwill, intangible, comes under the same head. Is there anything else? No, that's all. 2 items are there, so we have to enter under this. First one is tangible assets. Tangible assets. And second one is intangible assets. No need to prepare working note for that. Let us bifurcate here itself. Intangible assets. Intangible assets. How much is the tangible assets? That is motor vehicles, 4,75,000. 4,75,000, right? Intangible assets, that is goodwill. Goodwill is 30,000, correct? Yes, 30,000. Can provide a note if you want. That is intangible assets, you can write goodwill, isn't it? Tangible assets you can write. Let's write it, make it very clear. Tangible assets, motor vehicles. Motor vehicles, isn't it? Under that, motor vehicles. How much it is? 4,75,000, outer column. Then note number 4. This is note number 3, tangible assets. This is note number 4, isn't it? Intangible assets. Intangible assets. How much? 30,000. Under that, what is that intangible asset? Goodwill, 30,000. That's all, isn't it? Are there anything else? No, nothing. That's all. Then non-current inventory, sorry, non-current investments are not there. Then that is preliminary expenses, other non-current assets are this. Point B, other non-current assets. Non-current assets, no need of working note for that. Preliminary expenses 2,40,000. 2,40,000. You can write here preliminary expenses for your information. Expenses, preliminary expenses, wasn't it? How much? 2,40,000. So amount is written. Then current assets. Current assets, right? Current assets, what are the current assets here given in the problem? Current asset, yes. Cash at bank is there, cash and cash equivalents. Bills receivable is there, isn't it? Loose tools are there. Stock in trade is there. So these are the provision for taxation is there. So we have to prepare note for that. Current assets, under that current investments. Current investments means here current investments, bills receivable, provision for taxation, stock in trade, loose tools. No, current investments are not there. Inventories, of course, inventories, current assets. Under that, inventories, inventories, there is stock in trade, isn't it? Inventories, loose tools also comes under inventories, so let us provide working note for that. Inventories, that is current assets. Inventories and loose tools. Loose tools, that is stock in trade is how much? 1,40,000, right? Stock in trade or inventories we have to say under that. Under that, loose tools and stock in trade. So write that amount. Loose tools 12,000, stock in trade 1,40,000. 1,40,000. Here 12,000. So 152. 1,52,000. Right? Yes. Inventories, note number 5. 1,52,000. Yes, then it's over, right? Then trade receivables, only one item is there, that is bills receivable under that, right? Trade receivables. Point B, trade receivables. Straight away write Bills receivable, how much it is? 1,20,000. 1,20,000. Trade receivables 1,20,000. Then next one is what else? Cash and cash equivalents, right? Yes, cash and cash equivalents. And see, cash and cash equivalents. Cash equivalents, how much it is? Cash and cash equivalents is, that is cash at bank, 1,35,000. 1,35,000. Then anything else? Anything else? No, I think. Let us see. Any difference you are finding? Anything is left? Loose tools included, bills receivable included, cash at bank, motor vehicles, provision for taxation already included, stock in trade, 10% debentures, of course goodwill, yes, included. Discount on issue of shares, it will not come, doesn't it? Preliminary expenses, equity share capital. So here, let us see whether it agrees or not. There is some difference of 20,000, I think. That is discount on issue of shares we didn't include here, right? Discount on issue of shares, it comes under where? That is current asset, short term, that is other current assets. Discount on issue of shares comes here, other current assets. Other current assets. So right here 20,000, your balance sheet agrees 11,72,000. So this is what you have to do here. This is how you have to solve a problem of 6 marks, isn't it? Yes, it agrees. Yes, correct. Take it on assignment. With this, our financial statements comes to an end. I solved all the problems of the question bank without any, that is missing. I solved all the problems of statement of profit and loss and balance sheet, right? So now, take it on assignment for you. Same problem you just solve and submit it. Same problem, whatever we have solved just now, solve it and submit the assignment on time, and we will take up next chapter, that is analysis and interpretation of financial statements in the next class, because all the other two chapters, even cash flow statement also to some extent depends upon this chapter. So knowing the format of statement of profit and loss and balance sheet is very, very important. If it is not known to you, then if you fail to remember this, then solving a problem on, that is comparative statement and common size statement, will not be possible. It is not possible for the students. So make sure that you will understand the balance sheet and statement of profit and loss, and you will remember the format of both the statements, and you will solve the problem of this interpretation. Clear? So make sure of these things. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.